We just got a client that moved from California to Texas that got cashed out 1.5 million in these things, and so they're going to have high taxes, but they didn't know about the planning, and a lot of these companies don't provide tools for them.
Welcome to AFO Wealth Management Forward, a podcast about finance, accounting, technology, and entrepreneurship. We apply our decades worth of experience and insight into what makes businesses work, so we can help others grow both personally and professionally. In this ever-evolving marketplace, we help accounting firms and financial advisors grow their practice through the adoption of holistic wealth management services. Learn from industry leaders and subject matter experts to unlock the secrets of their success. A podcast that shows people and companies the transformative power of technology so they don't fear it, but instead harness it. Don't fight the robots, team up with them. And here are your hosts, Rory Henry, Director of Business Development, and CEO Rob Santos of Arrowroot Family Office.
Hi, everyone. Today, Rob and I are talking with founder and CEO of Pierre Accounting. Pierre Accounting provides tax and financial services to a range of clients from individuals to small businesses and corporations. Our guest today played professional basketball in the ABA and has since established himself as a leader in the tax and accounting industry. He's a CPA and has been listed on the Forbes Top 100 Must-Follow Tax Twitter accounts for 2021. So let's go ahead and introduce Eric Pierre. Eric, how are you doing today?
Doing great. I'm a little disappointed that I only made Forbes Top 100 tax accounts instead of, NBA Top 100,
Understood.
Rob?
Yeah, great to have you on, Eric. Just starting off here, could you maybe give our audience a little background on yourself and Pierre Accounting and kind of describe what you do?
Yeah, that's great. Yeah, so my name is Eric Pierre. I, you all mentioned about professional basketball. When I was in high school, I was playing basketball. My father was a CPA. And, he saw me playing around the backyard, say, "Hey, son, I've not received a letter from Roy Williams, Dean Smith, Jim Herrick, who was the coach at UCLA, Mike Krzyzewski. We're not getting any calls from NBA scouts. So I know you love basketball, but you may want to have a fallback plan just in case this doesn't work out." So I did a research paper in accounting, found it was a recession-proof career, and that's the route I took. I went to student at Boston, majored in accounting, did the 5-year program, interned at Deloitte. Then I started with them after college. Then I worked for Abbott Laboratories. I worked for McDermott, and I worked for Team Industrial Services. But I just didn't like the corporate structures, the glass ceilings, and not having the ability to really, build relationships with clients to have the impact that they really needed. So I started Pierre Accounting. It was a part-time gig, confession. It was a good way to write off travel expenses to Austin and Dallas since I had learned that. And, it's funny, when I started, I actually wound up, those people I met with all became clients. So I did get audited for that stuff with the IRS by when I passed it. So, and then in 2016, a friend of mine, asked me, "Well, what do you want to do?" And I just said, "Well, I want to live in SoCal, start my own business." So I moved to SoCal. I'm a single guy, and I opened. So we expanded out in San Diego. Then we opened a small office in Century City. I try not to go to that one often because it's 5 minutes from Rodeo Drive, and that's very dangerous for the wallet. And then we reestablished our office in Texas in Austin in 2018, and then I spend more time in Austin now for tax purposes and with the pandemic, and I like to have some sort of pseudo sovereignty, I guess. And so we have 3 offices today. I have a team of about 7 to 10 people, mixture of employees and contractors, and we do the compliance work. Obviously, we do one financial audit. We do forensic audit. I just spent 16 days here in San Diego as a financial expert with forensic, and then we also do, work with highly accomplished families and individuals on the high net worth side.
Right. And, speaking of the pandemic here, Eric, it's accelerated a trend in the accounting industry to move towards more of an advisory type role. How has your firm moved more towards an advisory type of service role during this pandemic? And, how are you servicing those clients?
That's a great question. Well, so we started work. We've had to augment some of the people that we have. So we brought in a tax attorney named Greg Wilder to help us with that. Because one of the things that we're really focused on right now is the employee retention credit. I remember Greg showed this credit to me, and I've read some of the bill. I never read the entire 5,000 pages because I'd fall asleep. And I saw that this was immediate cash, and so we've been focusing on that. And we occasionally get in contact with publicly traded companies about doing tax planning for their executives. And so just by adding him and then changing our marketing, and then this year we hired Julia Brown for public relations, and that's helped get us out there to get in front of different types of people as well. So
Great. And, maybe just spending a second on the kind of accounting landscape, because we've got a lot of accounting firms who dial in, and in particular around our new Wealth Management Forward program focused on advisory. What are you kind of seeing in the industry about the shift of from compliance work to more of an advisory model?
That's a great question. What I see is a couple of things. One, if you're going to be just compliance only as an accountant, it's a race to the bottom. There's too much pressure on pricing. If you're going to especially dip into the pool with the smaller businesses and individuals, because for people that are not accountants that are listening, I just need to remind people, you don't have to be an accountant you don't have to be a licensed CPA to do a tax return. So that's one of the problems that we have there. So when you do compliance work, you're unfortunately competing, whether you like it or not, with H&R Block, Jackson Hewitt. I'm not necessarily slamming it because I know people who own those franchises personally, but it's a race to the bottom, and the margins are really thin. And on the advisory side, it's just a matter of the engagements that we've gotten and other people that I know get them. It's usually through, having that relationship with the client and showing them not only the value, but at a good return on investment. So if I'm doing an engagement right now for a client to help them get, $380,000, $400,000 of ERC, and we're charging 20%. But not only are we doing the ERC, we're also going to help them with the restaurant grant, particularly since they're minority-owned business. So these are kinds of things that I know that we have to start doing to be able to get the advisor, because if it's just compliance, sure, you can keep the lights on, but the margins are not going to be that great. And it's also very frustrating, especially when clients texting you all hours of day and night. Where's my tax return? And blah, blah, blah. So,
and then they hear commercials on TV that says free, 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 free.
Oh, I know. I'll never forget. Last year, I was in my office in Austin, and somebody called, and we called this business owner back, and they had a pretty good sized business. They were making $750,000. This lady says, "Yeah, I'm not happy. My CPA. We spent a lot of money, and she did a terrible job on my S corp return." So I said, "Ma'am, do you mind?" So I'm thinking she spent $3 or $4 or $5,000. It's like, well, what'd you spend on the return? We spent $300. I said, "Excuse me, can you say that one more time?" Because I heard this I'm wearing Jordans, they're more expensive than that, and and so she said that. He says, "What do you charge?" I said, "Well, we charge $1,500 up." It's like, "Do you charge it because you're in the Arboretum?" I said, "No, that's the market rate. That's what a real firm should be charging you." So those kind of conversations are hilarious. I've had people scream at me on the phone for quotes, and I've had to tell people, "Look, I'm not holding a gun to your head to do business with me." So
yeah. And I mean, additionally, we've seen a drastic increase in automation and artificial intelligence, Eric, within the accounting industry. Now, how has that impacted Pierre Accounting? And what do you think are the best ways for continuing to provide value to clients with this automation and artificial intelligence?
Well, for us, we have to change the kind of clientele they go after. We have to, so we had to raise our prices this year. And with that, we made sure that we focus on clients that make at least, if possible, $500,000 up. Because, for instance, you mentioned automation. I believe Intuit with QuickBooks now, if your company makes, I think it's 250,000 under, they can do all your bookkeeping for $250 a month. Yeah. So when we saw that, it's like, okay, we got to go up. Mark Ferris said in his podcast, when did I go up? So we go up in pricing for new clients. We had to we automate some things too. So when a new client contacts us, we have a intake form to screen them out, what kind of business they have and their income, what they're looking for. And, we've had to throw a lot out because, we can't help. It's hard for us with our size now to help a client that makes only 100,000 a year. Those kind of clients, they need more of a business coach. And so we actually have a relationship with a CPA that does business coaching. Jessie Wunsch, she's out of New York. And so she's charging maybe $2,000 a year. And small business like that need to be shown how to do things on their own to save money. That's where we're sending them, to people like that, because now she can add the value. Because if you ask us to do that same level of attention, that might cost you, $10,000, $20,000. And we're doing it for you. And for a small business making $250 and under, that's 10% revenue. That's a steep price to pay.
Mm-hmm. Yeah, absolutely. And part of what we've tried to do with our program is we've seen similarly a lot of accounting firms are looking for solutions, and they're looking for a silver bullet. And what we find is coaching. A lot of them really need coaching to be able to enlighten, demystify a lot of these things. And we've seen that shift from trying to just provide a service to being able to find somebody that can coach you on the best practices to be able to elevate that.
Absolutely. And we do some coaching. It's just that this, especially now with the pandemic, I believe that there are a lot more small businesses, but we're at, and I'm not saying that I'm at the top of my game, because I'm not at the mountaintop, but with the demand that we have, and I've been fortunate to be, I've been interviewed Forbes 8 times, and then I've been at Yahoo Finance, so now we're in demand, and my team's like, you can't charge what you used to charge, you're now in demand. When people are contacted, they have an expectation you're charging this, and so we want to be able to help those small businesses, but we have to refer that out, because we want to do, like you all said, the advisory services, and then use the compliance aspect for those clients, kind of like as a package deal, like we're doing for a doctor out in Boston right now.
Makes total sense. And kind of shifting gears a little bit, recently in the news, obviously, Biden's tax plan coming down the market. Can you just kind of highlight some of the things that some of your clients are thinking about, and how you're advising some clients to think about some of these potential changes?
Well, that's a great question. And I chuckle when I see Biden's tax plan. We're telling our clients that there's a chance. Now, I don't know if it's actually going to happen, but the capital gains tax is one thing that a lot of clients are concerned about, because we have clients that invest in real estate, and they're not necessarily investing in $30 million apartment buildings. But if you invest in duplex, and then you have a $100,000 appreciation when you sell, and you have to pay 43%, that's discouraging. So for our higher net worth clients, we're already talking to them, letting them know that we're waiting to see on the strategies that the administration, whether they'll allow them to continue to have, for instance, conservation easement. You can reduce your AGI in half. And then for our clients that have $7 or $8 million of gain or more, we have strategies where those gains can be brought down to zero. So those are things that we're talking about. we have to data mine our tax returns to see AGIs for 2020 and reach back out to this client to see, third quarter where their income are at. So wait and see. We do think that taxes will go up because of all the money that's been given out. But some people think there's enough conservative Democrats to avoid a capital gains tax. I don't think it's going to quite make to 43.4% because I think the real estate industry has such a powerful lobby that I think they'll make them walk that back. But I do expect capital gains to go up.
And do you think that's going to be something that's retroactive as far as a tax hike? And are you getting questions like that from clients?
Yes, I do. I do. I think it's going to be retroactive, and I'm not saying to be negative, but if you just look at history and the fact that I think last year we produced, I think 20% of our all-time monetary supply, and Biden's looking to increase IRS audits, and we have a real deficit, and we want to spend money for infrastructure. So I do think that it's retroactive, but that's why it's important to have good tax planning. And I've spoken to some people that have stock options and they just don't get it. So for some of those people, I just sit back and say, okay, when they pass that law, you'll be calling me. I'm gonna be like, I told you so, and whip out that checkbook.
Yeah, on that point too, it just stock options, restricted stock units. We're seeing it, with a lot of the public market activity going out there. A lot of clients are getting some of these things, and we know that there's not a lot of education out there, and it can be very difficult to be able to see. Have you seen a kind of increased demand in that expertise?
Yeah. Yes. This year I've had the fortune of working with some clients that moved from here to Texas, and then California. They're really strict about the RSUs, and if it vests while you live in California, you have to report in California income.
New York too, huh? New York.
Yeah, I don't deal a lot with New York, but I'm not. That's a whole nother trick bag they got. But a lot of companies are having to do RSUs to keep people, and then also you have a lot of startups that are using the RSUs and ISOs for compensation. So we're seeing a need for that, and that's part of the reason why we brought in Greg, our tax attorney, Greg Wilder, to do so that we have a joint venture with them on the NSOs, ISOs, and ERC, because we didn't have that knowledge. I've known about these things, but we didn't have the knowledge, particularly what's a disqualifying disposition and how to treat it, and then how to plan for it. And there's more and more that, we're working with somebody that works at Tesla that got $1 million, and they decided not to leave California, which I tried telling them, but we just got a client that moved from California to Texas that got cashed out $1.5 million in these things. And so, they're going to have high taxes, but they didn't know about the planning, and a lot of these companies don't provide tools for them. So one of the things that we need to do a better job is build a relationship. We're asking these clients to get us introduced to the people that they work for, to get us in the door, to educate their employees about pre-planning. And the challenge is most established companies, their executives are, Elon Musk, Zuck, they're all going to have their CPA advisors, but the lower level people that are making $100,000 to $200,000, also $2 million stock, they've never worked with a CPA, so they wouldn't know that, hey, I should go plan for this and maybe find ways to cut my AGI in 25, 50%, and that's what we're working on doing as well.
All right.
And lastly, we also are building a relationship with companies like Dominion Trust for some of the exotic stuff.
I gotcha. Well, speaking of some of the exotic stuff, the emergence of cryptocurrency, Eric, has opened up the door for new opportunities to invest. How are you seeing this being significant for people from the standpoint of both an investor, and as a taxpayer?
Wow. It's funny you mentioned the crypto. I read the other day, someone paid $200,000 for NFT art of LeBron James dunking on Sacramento Kings bench player. I was like, wow. And they bought it just so they could play on a loop on their TV. It's like, I can download from YouTube, put on my Apple TV, and I'll pay $200,000. But
there's a clip of Rob. There's a clip of me dunking on Rob that we have.
Haven't been able to sell it yet.
I was like, man, I wish I had made some. I wish that was around when I, played. I played at Deloitte. We had a team. We were at the YMCA. We had lost a tough playoff game, and after the game, I threw a vicious, 180 tomahawk. But we didn't have these things to record that. I probably could have made the first $100,000. But in all seriousness, cryptocurrency is allowing people that maybe couldn't afford the traditional investing to start. I was approached to do mining. I was just concerned about electricity cost and not being near the server to do it. But that's open door. And now you're seeing, I just saw an announcement, Trevor Lawrence got paid in crypto for his first investment.
Yeah, Blockfolio.
Tom Brady started a company called Autograph. The kid at USC, Evan Mobley, did his draft announcement with NFT. I think it's here to stay. Mm-hmm. And, so I've spoken on Yahoo Finance about it. I think a lot of people are missing opportunities where you can use retirement funds to defer tax. Especially if you're a small investor, you can still put $6,000 a year into a Roth, and you can grow your crypto tax free and then cash out in retirement. And if you're 50 and up, it's $7,000 if you meet the income threshold. And then also there's no opportunities for pre-planning. Jim Cramer paid off his mortgage of Bitcoin, is what I read last week too. So it's here to stay, and we have to embrace it. And we're slowly telling the crypto world, say, hey, we'll embrace you. We don't think you're weird anymore.
Yeah. We in talking to a lot of other advisory firms, both accounting and wealth management, there's been a real lag for them to be able to incorporate that into their tax planning and their asset allocation. And we see that as a tremendous opportunity. Obviously, people need to get educated and talk to the right people about what they need to do and how they need to do it. But, we also tell all of our advisors and partner CPA firms, denial is not a business strategy. And just putting your head in the sand and, just telling your clients, don't do this because you don't understand it isn't a good business practice going forward.
No, I mean, I recently spoke with CoinDesk, and there's actually a lot of planning opportunities because, for instance, I mentioned NFT, and I was joking about it, but the IRS is looking. If you're a high earner and you buy and sell it and it's not in a business, the IRS may tax you for the long-term hold at 28% versus 20%. And chances are in 2-3 years, you're probably going to see higher end people dabble into that because, it's still considered a shadowy thing. And, some people aren't, I understand the taxation part of it. I don't personally understand the fascination with it because I'm concerned about someone controlling the blockchain like that afar. However, this is a real thing. And now that you're seeing pro athletes getting paid in crypto, you're seeing NFT art everywhere. This thing's like, that horse is out of the barn. So we have to embrace it. Now, you may not necessarily want to now, I know of somebody in New York, that's all they focus on is crypto. Now, that's not something I necessarily want to do, but we definitely after tax season are going to have to rethink our marketing and let people know that we are crypto friendly.
Yeah.
You do want to play that sandbox because I have a friend in Canada. Her brother was not that well to do. He invested in Bitcoin a long time ago, and he made so much money he was able to pay for a beautiful home right outside Malibu. So now that I heard that, I'm realizing, I better be friendly because a lot of people are scared to saying it because they're afraid, like, oh my gosh, if I say I have crypto, the IRS is coming after me. And it's like, well, you do need to report it, but you're not going to go to jail, and we can help you lower your taxes. And people are afraid, and people are getting paid for their services too. And there's opportunities to build wealth. and people are afraid of being taxed to death. And obviously, if we say who we say we are, we can cut their tax exposure from 40 to 20% or less, just like we would do for somebody selling a long-term asset like an apartment building.
Yeah, no, that makes sense. And kind of just, you had mentioned you work with a lot of professional athletes. Can you kind of describe your experience working with athletes and the importance of financial literacy in professional sports?
Yeah, we work with 2 professional athletes right now. We actually are supposed to meet with an agent, NFL agent, next month. Cross my fingers. We've been working on it for a while. A lot of them weren't like me, where I came from a home where my dad was a financial professional, so I had to learn about, I had to balance my checkbook once a month. He made sure I reconciled my checkbook. Now, people don't do that today anymore. Hardly anybody uses that, but I had to do that. And so just the education, because for the higher earning professional athletes, higher earners, they may make $20-30 million a year, but if it's not managed, it'll be gone by the time they're done. And a lot of pro athletes are not making the big contracts, and they're making 300, 400, 500,000 a year. But if your career is only 2-3 years, that money can go by real quick without proper planning. And so what's nice is that, we have strategies where, particularly for the higher athlete, that we can fund their retirement with very little collateral, and they have money that can't be touched by baby mama, can't be touched by the government, can't be touched in divorce. So these are things that, we're looking to do to help protect them, because they're making a lot of money in a short period of time. And, if I was 23, you handed me $20 million, I don't know if I would have done great things with that $20 to $50 million, versus now, if you gave me $20 to $50 million, I'd probably just retire, so see you later.
Totally. And I guess let's somewhat wrap up here on tax season ending. How was it for you, Eric? And can you offer, any advice for taxpayers who haven't yet filed?
Okay, so it's been very interesting and frustrating tax season this year, all the changes. And for us, we're not done till June 15th because, we have our base in Texas. So we still have another 6.5 weeks. So May 17th is just another day for us. If you haven't filed your taxes, you should file. And part of the reason you should file is that, some people have opportunities, even if you're high net worth. If you have investments, like for instance, in real estate, where you have accelerated depreciation to offset, you may be able to get the recovery rebate credit on your tax return, get some additional free money. And then if you do qualify for if you didn't get the stimulus now, but your AGI allows you to, you want to file it, because the IRS said, that's not the IRS, the government sent the bill that they are going to send out money all the way till 90 days after tax day or September 1, whichever is sooner. So those are the reasons why, because, your AGI may allow you to, and there are well-to-do people, because of, their tax strategies and some of the other high-end things that are passive or active, allow them to qualify for these things. You want to take advantage.
Makes total sense. How would people get a hold of you, Eric? How do they follow you on Twitter?
Okay. On Twitter, you can follow me at Your Fave CPA, and in my firm's account is at Pierre CPA. If you want to call us, you can call our office number 619-800-6852, and our website is www.pierreaccounting.com.
Great. And we'll put that in the show notes as well. Thank you very much, Eric, for joining us. We look forward to staying in touch and hopefully having you back here on the show in the future.
Thank you for having me. I appreciate it. I enjoyed talking about NFTs today.
Yeah. And we'll play maybe some 2-on-2. You bring somebody up and Rob and I'll take you guys on.
Okay. No. Hey, I'll bring Carrington. He played at UT in football. He's probably pretty good at basketball, so I think that's what I'll bring.
Actually, I'll take you on my team, Eric, and then Rob's got to get
All right, I'll let Rob and Carrington play. At least we'll have an athlete too.
There you go.
Carrington's younger, so you may beat us. I have a bad back now.
I doubt it. I doubt it very much. Wonderful. Well, thanks so much, Eric. Best of luck with the rest of tax season. Congratulations on all the success that you've had and on the continued success for your firm.
All right, thank you. I appreciate it.
Take care.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.